Good afternoon, ladies and gentlemen, and welcome to the YOOMA Wellness Q3 Results Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted anytime by the Q&A tab situated on the right-hand corner of your screen. Simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. These will be available via Investor Meet Company dashboard and will notify you by email when these are ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, I'd like to submit the following poll, and I'd now like to hand you over to Philip Glynn, Commercial Director, and Jordan Greenberg, CEO. Good afternoon to you both.
Good afternoon, Ali, and thanks for having us on the platform. My name is Jordan Greenberg. I am the CEO of YOOMA Wellness, and joining me today is Phil Glynn, Commercial Director of Vitality CBD. Phil, do you want to start with an introduction?
Yeah, hi, I'm the Commercial Director of Vitality CBD, and we've recently partnered with YOOMA and an acquisition that took place in August, and I'm here to give you a bit of a snapshot of what Vitality is all about.
Perfect. Thanks, Phil. What I thought would be best to do today would be to run through an investor presentation, really an introduction to YOOMA, what we've done, what the platform is all about, and then Phil will present Vitality CBD as a case study of one of our investments, one of our portfolio brands. And then at the end, we'll talk to the Q3 results and some of the financial metrics, and then, of course, throw it open for questions. So what we're doing at YOOMA is we're building a global, vertically integrated, multi-branded CBD and wellness platform. So what does that mean? We see a huge opportunity in CBD and wellness. We've assembled a leadership team. We think with a vertically integrated strategy, we're providing price advantages on the platform, in addition to access to capital for investee companies, supply of input materials, providing a cost advantage, access to additional distribution channels and global geographies. We think that there's real value assembling these companies on a platform. I'll come back to this slide in a second. I think the team is one of the things that I really like to highlight in these presentations, a team that has built multinational global public companies before, executed this roll-up strategy. Lauren Abney, who is our executive chairman, previously he's been CEO of public companies both in Canada and globally for the last 20 years. Most recently in the cannabis and wellness space, Lauren was the CEO. I was the CFO of Nuvera. We started that company in 2016, sold that to Freya in 2018, $826 million. Subsequently, I stayed on to Freya for a time. I was the CFO of a company in cryptocurrency, also an emerging industry. Lauren was then the co-founder of a company called EMAC Wellness, along with Antonio Costanzo, one of our directors, who is the CEO. They were acquired by Greenleaf International in Q1 of this year, $407 million USD. And the reason I say that is to really emphasize that this team has built companies before, achieved successful exits in cannabis, most recently creating over $1 billion of shareholder value in the last 5 years in this space. So certainly a team that has executed before. I'm going to go backwards one slide now. We completed a reverse takeover transaction in February of 2021. Did a couple of acquisitions at that point. I'll walk through the acquisitions momentarily and talk to the strategic rationale for each of those acquisitions. Most recently, we dual listed the shares of the company on the Aquis Exchange in London. We completed that dual listing along with a concurrent capital raise, about £7.5 million, 10.3 million USD in August of this year. And at that time, we told the market, we told investors we were going to do the dual listing, which we completed. We were going to raise some capital, which we completed. The use of proceeds was to complete 3 additional strategic acquisitions. We've actually completed 4 acquisitions subsequent to the closing of that dual listing. and that we were really positioning for Q4, where after the close of these acquisitions, we would be presenting meaningful run rate revenue to the market. And in our Q3 earnings release on Monday, Tuesday morning in the UK, we guided for Q4 revenue in excess of 5 million or 20 million run rate revenue, and we think that makes us one of the largest, certainly in the UK, and presents meaningful revenue for the company as we move forward into 2022. I'll talk to the acquisitions briefly, and in particular the strategic rationale for each of these acquisitions. There's a quick summary here. The first acquisition that we did was a suite of brands in the UK and Europe. In the UK, a CBD skincare brand called Blossom CBD Skincare, which we're relaunching now. Some great new packaging formulations, product set relaunching in Selfridges and John Croydon. We are talking to one or two national retailers about a potential listing there. In addition, our Myo Plant Nutrition, sports nutrition, sports recovery. We are sold in over 270 Holland and Barrett stores now, along with Selfridges, and a significant online presence for that brand. Again, in discussions with some national retailers there. Our What the Hemp and Hello Joya brands are French hemp protein brands sold through both major grocery listings with Monoprix, and we just launched in Casino in 414 Casino stores last quarter, as well as independents and health food retailers. So certainly some great brands in the UK, Europe. Next acquisition was Sakati Corp, the US manufacturer of CBD and other functional ingredients. We really think that Sakati serves as the foundation of our US vertically integrated strategy. It's supplying the control of those input materials that gives us both a quality advantage as well as a cost advantage. So Sakati supplies, a bunch of the major names in the industry, both on the raw material side, and most recently in Q4 we completed the acquisition. It's a few slides down, but I'll jump there now. This was Sakati completed the acquisition of a company called N8 Essentials, which is a downstream manufacturing facility also in the US. Really strategic to Sakati. Rather than selling just the input materials, the oils, we now have the capabilities to do some downstream manufacturing. So liquid fill, wax-based products, balms, salves, bottling, labeling, packaging, white labeling of finished consumer goods, both to existing Sakati customers and a wider customer base. So Sakati really serving as the foundation of that vertically integrated strategy, and now with N8 the ability to offer downstream consumer finished products. Vitality CBD, I'm going to let Phil talk about that. I am only going to say that we believe this is absolutely the preeminent CBD brand in all of UK and Europe. We think that this is a fantastic group. They've been so deliberate about how they think of the industry, how they view the industry, how they built this company, and we're thrilled to be working with Phil and his team. And I'll save the rest of your fire, Phil, for you.
Thank you.
Big Swig. This is an interesting acquisition. Again, in the US, no CBD products currently. This is a sparkling water and specialty drinks business operating in the southern United States. We see a great opportunity here. They have relationships with manufacturers as well as distributors in the southern US, both the major groceries, independent retailers, C-stores, various channels. And we see an opportunity here to develop a line of functional beverages with Big Swig, leveraging all of those inputs and leveraging the platform that they have created. Interesting to note that our most popular SKU at Sakati on the ingredient side is our water dispersible CBD powder, that's an excellent fit with the development of functional beverages with Big Swig. I mentioned that this is a global platform. We were very fortunate to have completed the acquisition of Vertex. Vertex is a Japanese company, sale of wellness products in Japan, primarily through two channels. One is home shopping networks in Japan. They have relationships with all of the majors, QVC, Nihon TV, Fuji TV. Interesting demographics in Japan, 130 million people, of which 100 million are over the age of 30. We're seeing a real emphasis on wellness and also on natural wellness, and CBD has just exploded in the Japan market recently. We're seeing CBD cafes, all sorts of CBD products, mainstream retail. So this is, in our view, a great platform to access that Japanese market, both their existing revenue and their existing sales channels, as well as the opportunity to have boots on the ground and an organization in market that we can leverage other CBD and wellness opportunities. I said home shopping network. The other major sales channel is obviously through e-commerce channels. They have listings on Rakuten, Yahoo Shopping, their own platform called Shop V. N8 Essentials I spoke to. And I think the overarching strategy here is to take these assets and find the synergies. For example, we're looking at now we've started the process of getting import approval for some of our European and UK products into the Japanese market. One of the things in the UK, we've really combined our organizations, or the Vitality organization, with the YOOMA Europe brands and achieved real cost synergies. We've combined our sales forces, we've combined our e-commerce platforms, we've combined our warehousing and distribution, finding operational synergies and cost savings there. So really we've made all these acquisitions, we've taken a step back. We're always looking at further growth and expansion, but really focused in the short term on continuing integration of these various assets. Phil, I'll turn it over to you now. If you could talk to Vitality.
Thanks, Jordan. I think, look, I'll open up by saying I think Jordan's spoken you through the clientele, who's involved in the company, the direction they're going, and the trajectory they're on. It's pretty obvious why we chose YOOMA as a partner, because of the growth potential and where this business can go by integrating. So I thought I'd give you a bit of a snapshot for 5 minutes on Vitality and where we've come from and where we're headed, and to show you what a UK retail penetration can look like. So we've pretty much got we set out to have an unrivaled distribution network with our contacts here in the UK. The management team at Vitality have got 20 plus years experience of putting products into traditional retail here in the UK, and we leveraged those contacts and looked at the market 3 years ago at what products were missing in the CBD category, and created a brand that looks good with high quality and delivers on what it says. So we are the most visible brand on the high street, we feel, and that was verified by CBD Intel. And so we feel that we can push on in those high street national retailers even further. You can see the names that we've got here, and the penetration that we've achieved. You basically can't find us on a high. You'll be able to find us on nearly every high street in the UK now. So we've also got one of the widest product ranges in a portfolio. You can see here, this is a picture of Asda's execution of, as an example, 17 different SKUs that we've got in Asda's 300 supermarkets. And you'll find us in the vitamin aisle, as you can see on the left. And then on the counter display, you see us in the pharmacy counter. And so you can see how impactful that looks as a consumer, trying CBD for the first time. And, because we've got such a wide range, we're catering to all different types of CBD users and their preferences for consuming CBD. So we've got 4 different ranges. We've got a lifestyle offering that you're looking at now, which is basically core oils and in a drop format and in a spray format, and they have different flavors, so berry, lemons, and natural flavors, and they have multiple strengths, of course, going all the way up to 4,800 milligrams in one bottle, which is 16% concentration. So that gives you all that you should need for a high user of CBD. And we then have 2 other oil-based ranges which have functional ingredients in them, and we focus on adding functional ingredients like turmeric, magnesium, ashwagandha, and vitamins like B12 and D3 and vitamin A, which enable CBD-based products to be marketed and advertised in a much more informative manner. I'll just skip to this slide here, where you can see this is our active range, which is targeted at sports users and that you'll find in gyms up and down the country. And we've got a range here that supports a full workout regime. So you can have your boost in the morning with caffeine added, and you can have your focus with vitamin A, and recover with turmeric, and relax with your 5-HTP and your magnesium in it. So it really gives us the ability to target specific uses with CBD. And we've also got a support range which targets immunity and calm and sleep as well, which you'll find in lots of pharmacies up and down the country. And finally, you'll see our cosmetics range here, which is a bit of a unique proposition. We've got probably the widest cosmetic CBD range in the UK, with 12 different SKUs in this range. And they include CBD-based products for your daily beauty routine, such as cleanser, exfoliator, serums for your face and eyes. And we've got another part of this range which is functional creams for specific uses like dry skin, for example, and anti-aging and anti-blemish, which you'll find in Tesco's aisles today. From a pricing perspective, we are, I'll skip back to show you some of these prices that you see here. And if you look at underneath on the Asda aisle, you can see they're affordable prices starting at £15 all the way up to the highest strength, which only goes to £50 for a 4,800 milligram. And you'll find that if you do your research, that is one of, if not the most competitive price per milligram on the market in the UK. So we're offering effectively premium products at now an affordable recommended retail price. So, you've got these executions now in thousands of stores at both independent and national level. And digitally, you can see here we've got Amazon and eBay logos there. And that's because we've been chosen for the Amazon CBD pilot, along with a handful of other CBD companies. But with our full range, and consistently, we're appearing in the top 3 positions when you're searching for CBD on Amazon. You can try it for yourself. And because of our rating and the sheer number of positive reviews we get, we've maintained that position since we went on there. And we've seen month on month, quarter on quarter, exponential growth of our Amazon revenue, which is really exciting, especially when they are looking to roll this out to the EU and other territories. So, look, this is an emerging category. We fundamentally believe in education as well. We've got a rep force who are up and down the country who are merchandising these stores. And I'll show you some executions. I mean, you see here, I'll show you now on a slide where you can see some of our executions of what we do in store, out of store, and raising the profile of CBD so consumers can see it and understand it and add credibility to the brand. But most importantly, I have to say, it's all very nice having some adverts out there, but it's about training the store staff. So what we do is we actually walk into stores and train every staff member in a pharmacy on how to sell CBD, what it is, how it interacts with the body, how to dose, choosing the right product for the consumer, because, as we all know, in any business, retention is key. And if they buy the wrong product for the first time, inevitably they might not come back because it doesn't deliver what they expected. So, we've walked into 300 Asda stores and gone behind the pharmacy counter and merchandise those counters and train those staff with our rep force. And there's very few other companies that have the capacity to do that. Elsewhere, it's worth mentioning, just to finish off, that on our own e-commerce site, we're breaking revenue records in recent months, month on month, because we're organically growing and implementing the right long-term SEO strategy, and we're seeing reaping those rewards now. And finally, from an international perspective, which goes along to the YOOMA global platform, 2022 will see us replicating the UK model that we've got, because we now feel that we've done well enough to now start rolling this model out internationally, and we're now in 3 different continents and leveraging some of those wholly owned YOOMA international companies with the Vitality brand. So we're now hopefully going to see some exponential increase in our global footprint across the world, and we're really excited to be on a journey where this can really take us to whole new heights.
Great, thanks, Phil. That was great. I love hearing the presentation, and even on our weekly calls, hearing all the wonderful things that you're doing at Vitality.
Appreciate it.
Let's talk about the financial results briefly. Continued revenue growth, achievement of cost synergies, and exploring new sales channels, as Phil referenced. And significant revenue growth. We're forecasting now for Q4 revenue in excess of 5 million. Of course, that's north of 20 million run rate. What's interesting on the global platform is, of that 20 million, there is a significant revenue contribution from each of UK, Europe, North America, as well as Asia. Talk to the cap table for a second. Maybe a bit of the elephant in the room here. About 100 million shares outstanding directionally. If we look at our share price, that's a market cap in and around 25 million CAD, 20 million USD. Based on our 2021 run rate revenue, that's an EV to revenue multiple that's in the 1.5 range, and we see our comps trading at a significantly higher multiple. So I think that there's some real value here. We remain focused on building a great company. That's my job. Part of that is executing the acquisition strategy, the buy and build strategy, integration of these acquisitions, continuing to grow the responsible, efficient deployment of capital, and continuing to grow the company and the brands. And that's actually segues right into some of the questions that I see popping up. Thanks for your participation and for asking these questions. Can we turn the cameras back on, please? Okay, perfect. Thank you. Okay, so in no particular order, are we planning for further acquisitions in 2022? The answer is absolutely yes. I think the focus in the near term is going to be to continue to integrate the existing operations, finding some of those synergies, really focusing on revenue growth. But of course, the longer term strategy is the buy and build strategy. So we are always looking at acquisition targets that are strategic, and to fill holes within the organization here. So definitely yes, but nothing sort of immediate. And then next question: do you see revenue growth, future growth from organic means or through M&A? I think as Phil has talked to, there are some real I like to view it as sort of the lower hanging fruit in terms of some of the integration opportunities. Pushing, as I said, we're looking at import approval for some of our UK European products into Japan. Some of the channel strategies that Phil spoke about where we can integrate. So I think that there are real opportunities for growth, both within our existing retailers, one of the things that we talk about, in the UK, for example, I mentioned that our YOOMA Europe brands are big with Holland and Barrett and Selfridges, and Phil listed off a list of other retailers being Tesco, Lloyd, Sainsbury's, Boots. Obviously in combining the sales forces there, we see some real potential for organic growth in those brands.
I'll take one here where Vitality CBD roster of online and physical retailers is impressive. Are you ahead of your peer group in the UK? And that's a fair enough question. There are data companies who measure this. It's not necessarily for me to say, but I think we believe we are the most distributed brand on the high street. We have the most listings. We are the most prominent visibly. And that will continue to grow. There's some exciting new retail wins to come next year. And ultimately, we don't believe anyone's ahead of us in terms of our peer group. So in the strict answer to your question, we are ahead. I'm not saying you're always going to stay ahead. So we're always working hard to grow that distribution. But there's some really exciting international opportunities, which are part of the YOOMA group outside of the current companies that are owned by YOOMA. And there is, new territories which we're really investing in, and we're going to have some positive stories to tell you in the not too distant future about these successes and how we're investing in and growing the Vitality brand in those territories.
I think if I could just add to that, Phil, one of the things that Vitality has been very deliberate about is partnering with the right retailer. So it's we're not just discussing door counts. That's an interesting statistic, but it's not in itself meaningful. We've partnered with the right retailers, and as Phil said, we've got our own sales force that are in the stores working with the store management teams at ground level to really promote those products and making sure that that the promotions are the right promotions and the visibility of the products in store. So it's not just a function of door count, but I think it's also the way that you manage the relationships with those retailers.
And there's a reason why Asda choose our product to have 17 SKUs in there, because they're seeing the rate of sale exceed most competitors, so they want to commit to the best brand, and we like to think we're up there with that.
Mm-hmm. Great.
How straightforward is it to operate in various countries which have different regulations related to CBD products? Yes, there is regulation evolving all the time. We are finding some countries are more complicated than others, and are therefore not necessarily worth approaching, but the ones that we are going into are strong in CBD and are open to CBD, and that's why we're being very calculated about where we expand and how we do it.
Yeah, I think we haven't mentioned the R word yet. Regulation and the evolution of the regulatory environment is obviously something that is critical to the success and continued growth of YOOMA. We've really focused on markets that are regulatorily friendly and where we've seen regulatory progress. Japan has been fantastic. The UK, the FSA has been very deliberate about the protocol and the novel foods regulations. And I think one of the things, the way we view the market, and one of the things that really sets YOOMA apart is going to be the regulatory standards, the highest regulatory standards to which we've built this business. So if you look in the U.S., our Sakati facility is USDA certified organic. It is GFSI, certified Global Food Safety Initiative. So we're looking at creating this business at the highest regulatory and operating standards. In the UK, YOOMA owns 2 of the initial 5 validated novel foods dossiers. It's going to be really important as we move forward that it's going to separate sort of the professional operators from the rest of the market from some of the other competitors who don't view regulations and hold out to the highest regulatory standards. So that's another one of sort of the fundamental pillars. But regulation is a challenge, and it's also a great opportunity, frankly. Let me see here. Let's talk about the markets. Listings on the CSE and on Aquis. When we raised money in the summer and did the dual listing on the Aquis, that was deliberate. We've had a great working relationship with the CSE, and of course through their reciprocal arrangement with the Aquis. That was a fairly straightforward listing process, and what it allowed us to do was, because I think the Aquis is much more friendly to our buy and build strategy when we look at the significant acquisition thresholds and the dilution allowances. We were able to raise money, do these 3 acquisitions on the Aquis exchange that we wouldn't have been able to do on some of the other exchanges in London. So it was a deliberate choice to list with the Aquis. It's no secret that the liquidity on the Aquis is problematic for us. So we're looking to address that. We're looking to address that in a number of ways. Obviously by continuing to tell the story and do these types of events, and make sure that we're updating the market with everything that we're doing. The other thing that we talked about when we raised money in the summer was exploring the possibility of an uplisting, either in Canada or in the UK, and that is something that we are in fact still actively pursuing. Okay, let me see here. Okay, are there any other questions here? I see some comments. Thank you for the comments. Yeah, what's the vision? What's the longer term plan? I think that there's a real opportunity here. We've talked about regulatory clarity. We've CBD in isolation. And this is a U.S. comment. Obviously, some of the regulatory challenges have limited the growth of the business. To recap, obviously, CBD is legal under the terms of the 2018 Federal Farm Bill, but without a regulatory pathway from the DEA, and the regulatory pathway remains uncertain. So, the industry hasn't grown the way that we anticipated it would, and that really sort of directs our deployment of capital. But we think that there's a real opportunity. We think that regulatory progress will come in the U.S. It's not a question of if, but when. We see, bipartisan legislation in the Senate. We see, lots of interesting political movement. We strongly believe that regulatory change and clarity, frankly, will come. But in the meantime, we continue to deploy capital in jurisdictions where we see the best returns and the best market growth opportunities. So look, in 5 years, if we can continue to make acquisitions and make the right acquisitions that are strategic and accretive, there's no limit to the potential growth for YOOMA. One thing I didn't say is the model for these acquisitions, and maybe this sort of talks to the question about management across various jurisdictions. The acquisitions have largely been a combination of cash and shares, and with some earnout targets, and we think that creates perfect alignment between ourselves and the vendors / continuing management of our investee companies, and both with an incentive at the portfolio company level, and also with an incentive at the YOOMA Topco level. So we think that model gives us the opportunity to continue to grow. Okay. I think maybe we'll take one more question here. Just read through a couple here. Okay. Yeah, acquisitions and integration. The share price. We're not sure where that selling is coming from. We're not sure what's driving that. I think when my job is to continue to do everything in my power to build the best company that we can. It's frustrating for us. I look at some of our comps, and especially on the UK side, and we see companies trading at 50 million pound market caps with virtually no meaningful revenue. We think what we've done is we've executed according to our strategy that we presented to the market. Bringing real revenues, real vertical integration, real multiple geographies. And we're trading at a multiple of 1 times revenue. I think part of the challenge for me is to continue to tell the story and get the story out. I hope if we continue on our journey to build a great company and communicate all of our little wins to the market, that will be reflected in the share price.
Jordan, perhaps it's a good time for me to come in there. Thank you for addressing those questions from investors today. And of course, the company will review any further questions submitted and publish responses where it's appropriate to do so. Just before redirecting investors to give you feedback, I was just wondering if I could ask you for a few closing comments.
Sure. Thank you, everybody, for taking the time to attend the presentation today. We appreciate all of your support. We are very excited about YOOMA, about the platform, about the underlying businesses, about the future of the CBD and wellness market. We will continue to build a great company, and we appreciate all of your support.
Jordan, Phil, thanks for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that management can better understand your views and expectations. This will only take a few moments to complete, however, it is greatly valued by the company. On behalf of the management team of YOOMA Wellness, we'd like to thank you for attending today's session. That now concludes today's presentation, and good afternoon to you all.